Good morning, and welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We've got a packed session ahead, covering the latest developments in cryptocurrencies, stock markets, and geopolitical tensions. Eli, let's kick things off with what's driving global markets right now.
Thanks, Maya. Investors are clearly nervous. We're seeing broad-based declines across equities and speculative assets alike, driven by fears of delayed Fed rate cuts and tightening liquidity. NVIDIA and its suppliers are leading tech sector losses in Asia, with SoftBank down 6% and indices falling 2 to 3% overnight.
Let's talk specifics. Bitcoin has broken below $90,000 for the first time in 7 months. What does this tell us about crypto sentiment?
It signals a major shift in risk appetite. Bitcoin's drop below $90,000 reflects broader market jitters, especially around macroeconomic uncertainty and AI valuations. Traders are bracing for NVIDIA's earnings, which could either stabilize or exacerbate the sell-off.
Turning to technicals, we've got several key analyses lined up. Let's begin with Bitcoin Tether using the HEMA trend levels strategy. Can you walk us through the indicators here?
Absolutely. The Bitcoin Tether daily chart shows extreme volatility contraction, a classic sign of consolidation. With average true range at 3,834 and premium stochastic oscillator signaling an oversold condition, -0.96, we're looking at a potential breakout setup. But given the strong bearish trend confirmed by BHS and ZLT strategies, caution is warranted.
And how do these findings compare with Ethereum's current standing?
Ethereum isn't faring better. On the daily time frame, it's stuck between fib 0.0% and 23.6%, showing weak momentum. Relative Strength Index at 35.28 confirms lingering bearish pressure, while moving average convergence-divergence histogram shows decreasing selling intensity but no reversal yet. It mirrors Bitcoin's indecisive posture.
Switching gears to stocks, JPMorgan's Daniel Pinto warned of a likely correction in AI stock valuations. How should investors interpret that?
Pinto highlighted that despite economic resilience, the S&P is trading at 23 times earnings, a stretched valuation. While AI remains transformative, he noted large language models haven't fully impacted productivity yet. That suggests a recalibration phase for AI-heavy names like NVIDIA.
Let's zoom in on NVIDIA specifically. The 4-hour Smart Trend Indicator reveals some interesting dynamics. What should traders be watching?
The NVIDIA chart shows a pullback from highs near $191 to around $186.55. Key resistance lies at the bearish order block between $196.75 and $199.01. Until price breaks above that zone, bears remain in control. Meanwhile, support at the November 14th uptrend line offers a short-term floor.
We also see geopolitical risks weighing heavily. Japan and China tensions over Taiwan remarks, alongside Trump planning to sell F-35 jets to Saudi Arabia. Could this influence commodity plays?
Certainly. Geopolitical friction often boosts safe haven metals and defense-related sectors. Pence's comments on Saudi leadership in expanding the Abraham Accords add another layer to regional diplomacy. These factors can indirectly lift gold and defense stocks amid uncertainty.
Before we wrap, let's touch base on Australia's growing private credit exposure, Macquarie with 70% of equity tied to such assets. Is this a systemic concern?
It raises red flags. At $200 billion industry-wide, regulators are rightly concerned about insufficient collateral evaluation and lack of transparency. If defaults rise, institutions like Macquarie could face outsized losses. It's worth monitoring as part of broader financial stability discussions.
To close, what should our audience keep an eye on tomorrow?
All eyes should be on the U.S. jobs report and NVIDIA's Q3 results. Those will shape near-term sentiment across equities and crypto. Also, watch for any escalation in Sino-Japanese relations. It adds fuel to commodity trades.
Thank you, Eli. For our listeners tracking technical setups, stay tuned to those key Fibonacci and moving average levels. We'll be right back after the break.